Bitcoin is rapidly approaching the major bear market diagonal resistance, breaking through this level, and Bitcoin will technically break out of the bear market. However, the 4-year cycle suggests we could potentially see a move towards the $10,000 to $13,000 level. We're going to go ahead and talk about those 2 points today, discussing the differences, similarities, and obviously coming to a conclusion. Let's go ahead and dive into it. Okay, welcome back to the channel, MegaWhale team. Thank you for tuning into today's video. I hope you're all having a fantastic day. We have so much to talk about today. We're going to be talking about the short-term price action. We're talking about this rising channel. We're talking about the news events and how these news events can potentially impact the market, how you should react, what you should be doing, and of course, we'll talk about the macro bear market and the 4-year cycle. Let's go ahead and dive into today's video. Now, before we get started, smash the like button, comment down below any questions, and obviously subscribe to the channel if you are new. We do daily Bitcoin technical and structural analysis, focusing only on the objective data and facts. Also guys, second link in the pinned comment down below, you'll get access to our Telegram channel. We post daily news, updates, charts, analysis, all our videos, and so much more. You can get access to our VIP channel. Third link down below in the pinned comment if you are interested in trading signals. Let's go ahead and get into it. So, market data, December has actually turned green. We're up 0.4%. Very nice to see. We haven't really had much green price action for quite some time now. November, of course, was a very bearish month with the FTF exchange falling. We had quite aggressive downward price action during that month. For the quarter, however, we are still at 11.22 negative. Again, for us to flip Q4 green, we actually do need to get above 19,000. So 19,000 is going to be our price point that we do need to reclaim for the quarter to turn green. Volatility is starting to fall off a cliff as we start to catch up in this 30-day period volatility and delete that massive jump in volatility we had on the 6th, 7th, and 8th of November. So we can see volatility is falling down to about 2.58, now pricing in, or should I say smoothing the average volatility over, what we had a 20-day period of basically no movement in volatility. It's going to start plateauing and heading down. Volume isn't significantly high. Again, we aren't really in any price ranges to facilitate a lot of volume. If we take a look at the Bitcoin chart, we haven't really made any definitive directional move yet. What we have seen is a bounce through these support ranges. So we had obviously this horizontal range here. We had a nice strong bounce on that uptrending support line here. We're going to take shorts below about 16,750. Short signals never really triggered. We didn't really close below there, so we didn't really take any shorts, but we did say, if we get below this trend line, we can be looking for shorts. We did actually bounce from this trend line. We're pushed up and we're rejecting from this 17,240 level just above this trigger zone. What we're really looking for, however, is a break above this upper level, which corresponds to the local high we had on the 10th of November, as well as a rejection point on the 5th of December. That's really that key level we need to get above for us to see any sort of continuation upwards. Until then, like we've been saying for the last couple of weeks now, any kind of price action you see within this range, you have to be skeptical of and don't jump into it too aggressively, because it's proven to be a long sideways consolidation with a lot of chop, right? We're waiting for two things. One, a clear break of this trend we've been developing over the last 20 or so days, all right, now about 30 days, or two, a clear of this local high zone to confirm a swing upward where you can look for longs again. Until then, keep your trading steady and obviously be a little bit more patient, particularly with a lot of news events to follow in the next few days, which we'll talk about in a moment. Let's talk about the market as a whole. The DXY has rejected from that major support level we were talking about yesterday. In yesterday's video, we said if this high cannot clear this high here, we will most likely reject back down to the 104 level. We have actually seen that rejection. We are now back in a support range. This level over here is going to be acting as a small area of support. We can expect a bounce from this level again. Looking at the total crypto market cap, we are of course actually rejecting from a pretty key level, and that level being this upper support resistance zone we developed in late June. It was like the 30th, the 20th of June. Okay, so we're retesting that same zone. Again, this area has been an area of massive resistance and consolidation over the last few days. So we are pushing into that. We are still within the smaller time frame moving averages. We take a look at the moving averages here on the daily. We're specifically looking at the 4, the 15, the 17, the 22, the 26, 28, and 32. That being these blue lines here, you can see we are still within this consolidation zone. And where does that consolidation zone end? Well, when we're breaking through its lower levels, obviously Bitcoin will have then broken that uptrend by then, okay? Or we're clearing these local highs, okay? Previous high that we had around about this level over here, where Bitcoin would have created that new high and cleared that November 10th to December 5th high. And obviously then it will continue into this range where Bitcoin could go back to 18 grand. So taking a look at that consolidation, while the prices within these smaller time frame moving averages does basically tell us that there's a lot of consolidation and chop going on. We don't want to be taking too many positions in that area. Dow Jones found a decent amount of support within the support block over here we talked about yesterday. Again, for us to see any sort of longer term continuation to the downside or larger move, we do need to lose the support level here that can take us back to this level. Until then, we do have a chance to go upwards, but again, anything between these two levels, anything between 35,000 and 33.5k, we have to be a little bit more skeptical of, okay? This is a major support resistance zone, okay? But before we retest, basically, the point of which is going to flip this entire downtrend and we're going to basically push upwards again, okay? Until we break through there, we are coming very close to massive resistance, and therefore we should be a little bit more skeptical. We should be a little bit more biased in our expectations, and we should expect the worst case scenario to prepare for the worst case scenario. If we do break above here, well then all green lights go back on. Same goes for the S&P 500. We have come down and retested a pretty major support zone. You can see the support acted as a resistance a few times in the past, breaking down from this rising wedge formation. Technically, we are still in this downtrend now, very small downtrend. We haven't reclaimed that wedge. We haven't broke through its diagonal resistance. So technically the S&P 500 is in a smaller time frame downtrend, and of course our macro downtrend here representing our macro bear market. Breaking through this diagonal will be very crucial. Bitcoin will most perhaps break out of its macro descending trend line, which we'll talk about in a moment, at the same time the S&P breaks out over here if it does occur. But of course we're waiting for that trigger over here for a confirmation of a clear of these highs to continue upwards, and we'll talk about that in relation to Bitcoin later on as well. So let's talk about the news events really quickly, and then we'll jump into the Bitcoin chart. So news events, we have the PPI, we have core inflation, okay, inflation, and we have the Fed interest rate decisions. These are all coming within the next 6 days. Obviously, we have PPI coming up very soon. That is coming in 8:30 a.m. December 9th UTC -5 time, which is pretty soon. What's that, like 10 hours or something? It's pretty soon, guys. So 10 hours or so, 9 hours or so time, we do have that that decision on the PPI, that data coming out. Obviously, PPI is producer price index. It's telling us the inflation mainly on materials for producers. And obviously, if that is coming out higher than anticipated, higher than previous and consensus, it's going to indicate a potential leading bit of information that CPI could potentially be rising as well. Because when the prices go up for producers, they shift those prices down to consumers, and then CPI rises. So it's generally a leading indicator on what inflation for CPI can potentially be. So when we see a very poor PPI or a drastic shift in PPI, we can generally expect the same thing to occur on CPI. So keep your mind on that. Keep your eyes on it. We're looking for a positive result on PPI. A positive result on PPI will indicate CPI will be positive. If CPI is positive, we can go ahead and assume that the FOMC hike is going to be more relatively a lower hike in comparison to 0.75 or even higher potentially. Okay, so keep your eyes on that. Very important stuff. Let's go ahead and get into the short-term analysis of Bitcoin, and we'll gradually build it up to the larger time frame. So like we said before, guys, we are still within this uptrend, a very clear uptrend for Bitcoin, and we're still very much in this chop zone, this sideways consolidation, this chop zone, rejecting from resistances, not looking ideal. Like we said at the start of the video, we don't really care about anything that happens here. Nothing here concerns me. I do not care. I don't have any intention to be trading it too much. I don't really look at it. I don't really care what's happening. It doesn't bother me because these short little swings are nothing more than chop, swings, sideways consolidation, a lack of decision, or what you could say indecision, leading up to news events. I do know one thing sort of sure: when these news events comes out, this price action is going to move in any direction. It doesn't matter what the charts are looking like. So we do have to be aware that the news can shift this price action. What we do need to be aware of, however, are the points on the chart which confirm moves to occur, because we have no confirmation in these moves over here. It's just bouncing from supports, hitting resistances, bouncing from supports, hitting resistances. It's literally just ranging, okay? For us to have these shifts in direction, we need to break certain triggers. Those triggers lie at our uptrends, okay, and local tops, so relative tops. So what that tells me is, number one, we are waiting for a breakout here for longs, okay? We're waiting for a breakout down here for shorts. As you start approaching these upper resistance levels, such as where we are now, you can take higher risk short positions in anticipation for breakdowns, okay? And as you reach these support levels, as we did here, you can take higher risk long positions in anticipations of rallies back upwards. Again, there's no confirmation in those trades because we are not technically out of those triggers, but you can take those positions in assumption that those triggers will not be validated and not be reached, and the opposite will occur. So right now, as we start approaching this upper trigger zone, your bias should be more towards a rejection, as resistance is resistance until it is proven not to be resistance. One of the key fundamental rules of trading is that data is very relative until it is not. So as we approach these resistance levels, you could be definitely taking a higher risk short here, putting your stop loss above these highs, okay, taking your target down below into these support levels, okay, particularly we're looking at 16,600, that being that POC level. We can go ahead and bring it up in a second. So 16,600 was that POC level, which you can see this red line over here. You're looking at targets over here, potentially even lower if we go down. And of course, guys, if we do break to the upside, you instantly can flip that position and go for a long. I'm not saying you can do that, but I'm saying that is a scenario or an example of how you can position yourself with these support and resistances as you approach resistances in uptrends that which are expected to break. We can go ahead and take those shorts, because we do know, guys, one thing for a fact: we are in a rising channel, and rising channels, more often than not, they break to the downside. So we already have this inherent bias in the structure of the chart that at some point we are going to be breaking down of this, more likely than not. It's about a 70% chance we break towards the downside on those structures, then we continue upwards. So with that bias, we can go ahead and assume these resistances, particularly key resistances, are even less likely to break, and that is why you can take these higher risk positions intra range before they actually trigger, if you have the risk tolerance to do so. Otherwise, waiting for those triggers, putting your stop loss slightly higher up, will be the better option, okay? Just an example of what you can do when trading. Again, you can apply that to uptrends, you can apply it to downtrends, you can apply it to upward trigger breaks like you would do over here, or you can apply it to downward trigger breaks. It's just a pure example. I don't recommend following that unless you do have the risk tolerance and you have analyzed it yourself. Now, let's talk about where the price can go downwards. If we do break this uptrend, it's very, very clear where we're heading, and we'll talk about the 4-year cycle in a second, and it kind of exacerbate and talk about it in a little bit more detail. But you're looking for these major supports. So you're looking for supports here, you're looking for POC levels, you're looking for next major zones. Very, very clear. If we break down any of those points, can be targets and possible reversals, meaning we can head down here and reject and continue upwards, or we can head down here, reject and continue upwards, but we're looking for target profits at those levels. You're moving your stop losses as it goes towards the downside. This is where it gets really fun and interesting though. If we break to the upside, we have some very key resistances, which I need to show you on another chart, that we need to retest, break above, but more importantly, we have some key horizontal supports and diagonals that actually indicate massive things occurring on the chart. So first and foremost, if we do break this trigger, we do, according to the volume range, have a shot into this range. Okay, 18.72 to 18.650 or whatever it is, a resistance, all right? That resistance is the base of support, okay? The base of support for the entire June to November support range, okay? This entire June to November support range was founded on that 18,100 to 18,600 support zone. So that is a key resistance, a very key resistance, okay? Pushing upwards through about 18,100 or 17,400 trigger, the upper trigger, will take us into that range. We can see when we meet that range, we're met with massive, massive resistance, huge resistance. It gets even more interesting, guys. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. If we do push through that level, we are actually breaking through this macro descending trend line. This macro descending trend line is the bear market resistance. That is the downtrend. This essentially is our bear market. If we break through that trend line, if we break through 17,400, subsequently this local top, and we can break through this downtrending resistance, which is that bear market resistance, we are technically breaking out of the bear market. But we do have a lot of upward resistance directly above us, so these are still rejection points. It can provide a false sense of security upon those breaks. So what are you waiting for when in terms of confirmation? We're waiting for 2 things. We're waiting for, obviously, a break of this downtrend. We're looking for a price push above this level here, and as well as a 19,000 POC level, potentially a support resistance flip on that zone. That would be more confirmation that the bottom was in. We have broken through and back over this major support level, confirming the fact that this zone here has been flipped and it was deviation, and then we can continue upwards. What are we looking for the upward move to confirm this uptrend? Well, we have to break back above these key levels. We're looking for 24,000. Okay, this being the crunch zone in December. We're looking for the yearly resistance on Bitcoin. This is the $30,000 level. Upon that point, we are very much in an uptrend. So we do have some very interesting levels above us. The price action is coming to a very particular spot, and it is no coincidence that it is at this spot as we approach major news events. And these major news events can make or break the market. We could see significant rallies towards the upside if we get positive news. We can see significant rallies towards the downside, guys, if we get very bad news. So let's talk about the 4-year cycle now, because we've talked about the uptrend, we've talked about this bear market, we've talked about short-term price directions, and we'll say one more thing right here. It is very obvious that this downtrend will break at some point. Okay, these downtrends don't last forever. Bear markets don't last forever. This downtrend resistance represents the bear market resistance. At some point, this bear market resistance is going to break, whether it be now, whether it be in a few weeks, or it be in a month. At some point, it's going to break. Now, taking a look at technical confirmation before we look at the 4-year cycle, we do have a few key indicators on particularly the weekly and the 2-day chart, which can help confirm these breakouts. And we'll go ahead and delete everything on the chart real quickly. We can see we have a falling wedge structure, okay, right over here on the RSI. Really potent structure in terms of bullish strength. As we already know, falling wedges are bullish reversal patterns. And of course, as we know, the RSI determines momentum. Momentum drives price. So we're looking for a break over this downward sloping resistance here. That will be one major trigger. The next major trigger we're looking for is, of course, a 2-day cross on the 50 EMA. The 50 EMA is sitting around that $19,000 level, which lines up quite well with the POC level. And as we approach these levels, it should be pushing into that lower support range between 18,100, okay, and 18,600 should be pushing there. So we're going to get met with a lot of resistance at that level, even if we break out of that downward descending trend line. If we take a look at other stuff, for example, the daily chart, we have a bullish divergence on the RSI. It looks decent, okay? And this extends to a larger time frame as well. We'll show in the daily. We do have a bullish divergence on the RSI, okay? So we do have confirmation that that bottom trend line is here. For our upper trend line, what we're looking for rejection points. We can go ahead and draw our upper trend line across. We do have a falling wedge structure on the daily chart. Again, falling wedge structures are bullish. Where does this bullish break occur? Well, it's going to occur above 19,000 potentially. So again, we will have added confirmation that when we do retest a POC, we are breaking out of not only a support resistance range that is very, very strong, a high volume range, point of control, but also a structure. Those 3 points of confirmation give you more assurance and confidence in the breakouts, and of course the trend flips. So guys, I'd be stupid to say, and I think everyone is dreaming if they're saying the markets aren't looking more and more bullish. There's no doubt that it's looking full of potential. We're coming up to major downward resistances. S&P 500, Dow Jones, bond yields are falling, DXY is falling. There's no doubt the markets are looking healthier. There's no doubting it, okay? If you're saying the market still looks trash right now, okay, on a smaller time frame, you are kind of unaware of what can potentially occur from these levels, because we're approaching some very, very major macro reversing points on the chart. I'm not saying the price can't go down, because we're not out of these points yet. We still need to get above these points. You know, we still need to break above this smaller time frame high. This is 18,000 range, it's 19,000 range. We're just downward trending resistance. We still need to break above those levels. But how the market is shaping up, it's telling us with the current price action, it's potentially going to facilitate an attempt to do so. And that's all we need. An attempt to do so gives the market a chance to potentially recover. Okay, very, very different structure we're forming here in comparison to what we formed prior. At the moment, we are in a downward descending channel, but we are forming a bullish structure, as you can see, which is this falling wedge. Okay, prior we had this rising wedge formation, we had a rising channel formation. Okay, this consolidation pattern is more bullish, and again, it is expected to be more bullish as we have actually completed our descending channel structure. We have a retest, a retest, a retest, a retest, a retest. 3 on the top side, 2 on the bottom side, spread apart evenly. That is a confirmed and completed descending channel, meaning that the next retest is more likely to be a breakout. So be very much aware of that. Again, we can't predict the future, but what we can do is we can define exact points on charts that shift the price action and then jump into those shifts and trade with the shift. Okay, you're trading with the reversal in the trend. You have to position yourself with the trend and trade with the trend. No one can possibly tell you exactly what's going to happen. I'm not even going to try to tell you exactly what's going to happen. What I can tell you, I can specifically tell you the important levels of which Bitcoin does need a retest, break above to confirm moves in directions. And those pieces of information are the most important pieces of information, because it allows you to plan. Okay, it allows you to be structured and precise with your actions. It allows you to avoid and mitigate and reduce any potential risk when it comes to trading. So very important. But let's go ahead and take a look at the 4-year cycle, because from a structural standpoint, we're talking diagonal standpoint, we're talking technical standpoint, on the daily, on the weekly, we're looking better. Okay, we're looking better. We're talking about the 4-year cycle, it does suggest we have some room to go. Here's the 4-year cycle. We've seen from tops to bottoms an average of 14 bars. Okay, we'll go to the monthly. About 14, 13 bars. Okay, you can see it over here. 13 bars, 396 days. 14 bars, 427 days. 13 bars, 395 days. So according to an average of the last 2 cycles, we should technically be bottoming in December. And if we're bottoming in December, it gives us a potential to fulfill the percentage retracement we have seen prior, which is about 85, 83%, we've got 84%, which takes us anywhere to about $11,000 as a low. Now, $11,000 isn't a random level, okay? The 11,000 to 13,900 actually is a very crucial level on the chart, because it actually retests, as you can see, the monthly candle high and open of the 2017 chart, as well as the high and open of the August and June 2019 post-bull bear market rally. Okay, very important level right over here, a very major support level. Losing this level will be catastrophic for the Bitcoin chart on levels we haven't seen before. This level is an incredibly important level to stay above, and ideally I would not even like to see it retested. Okay, I would like to see us not even retest this level and just continue from this point. But as the 4-year cycle stands, as it remains valid, which it is, we do have data to suggest we could potentially see another crash back towards this level. And again, this crash could be facilitated by a few things. Number one, it could be facilitated by the news events. It could be facilitated by a rejection, a strong push and strong rejection from any of these levels, being this level here or the 19,000 POC. We could see a rally and crash from those levels. Very important to understand that we don't have pure confirmation until we break out of this trend, that POC and these levels here, okay? It is just added points of validation, but not confirmation yet. So guys, I'm gonna leave the video there. If you've got any questions, leave them down below. Hope you enjoyed today's video. Hope it was insightful, beneficial, and I hope you learned something. More importantly, I hope you're more aware of the price action on the small time frame and larger time frame. But most importantly, I hope you're aware of the macro and exactly what to look for, exactly how to react, and when to react, most importantly. Okay, we're gonna leave it there, and I'll catch you guys tomorrow. And obviously by tomorrow we should have the PPI out, so we'll do a quick assessment on the PPI, talk about what's happened with it, what it means, and how it's influenced the market. And hopefully by then we've seen some more upside. But again, as we remain in this ascending channel formation, we do have to be more aware that this is a bearish pattern, and at some point all bearish patterns generally come to an end. Okay, I'll leave it there. I'll see you tomorrow. Cheers.